Hello and welcome to today's video. I am Willie and I'll be bringing you through today's topic, which is what are indices? So strap on your belts, get your pen and paper ready, let's dive in with Willie. First and foremost, I think most of you might have wondered what is the difference between index and indices. Well, an indices is actually the plural form for the word index, or it also refers to a group of indexes. Now that's out of the way, let's get started with today's topic. Imagine indices as a performance measurement. Indices groups a number of shares together from the exchange and measure its performance by calculating the average movement per day. Now, we will not go into detail on how each index is being grouped or how it is being calculated, but here's an example. We have an index called Nasdaq 100, which actually tracks the performance of 100 largest non-financial stocks in the US stock market. If a majority of 100 stocks move upwards or downwards, the index will also trend upwards or downwards respectively. Now that we got the basics out of the way, we're going to look at the different varieties of indices around the world. In the US, we have Dow Jones 30, Nasdaq 100 and S&P 500. In the UK, we have FTSE 100, whereas in the Asia region, we have Hang Seng Index from Hong Kong and Nikkei 225 from Japan. Now that we know the basics of indices, we're going to look at how it's going to be useful towards me or you as a trader. The first one will be stock market condition. Well, as we all can recall, index actually records or tracks the performance of a stock market. If the index itself is actually trending upwards every single day, this would mean that the stock market is also doing quite well. Otherwise, if you look into the index itself is actually trending downwards every single day, that means the stock market condition is actually not doing well, or it may go into turmoil anytime soon. This will actually help us to gauge whether we should invest in the current times or we should wait until the stock market condition improves in the future. Second will be investor sentiment. We can actually utilize index or indices to gauge how the market is actually feeling towards the stock. Now we can use this in order to determine the demand for the stock or a portion of it, which could actually help you in your trading. Third would be diversification. Some indices or index actually focus on companies from one particular segment or sectors only. Thus, some investors may actually include this kind of indices in their portfolio in order to further diversify it. Since we already know how useful indices are, here are two reasons why you should trade indices. First is they are highly liquid. This would mean that investors will not have to face difficulty in opening or closing their orders, as well as lower spread. Second would be more trading opportunities. Indices are actually a mirror of an economy's health. Thus, anything that could happen towards the economy could actually induce volatility in the index's movement. This will actually in return give us more opportunity to garner profit by just trading indices. If you find this video helpful, don't forget to click the like button for more content just like this.